Hello, 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 everybody. Welcome back, welcome back, welcome back. Today's topic is one that might cause you a little tiny bit of anxiety. We're going to be talking about IRS audits, but fear not. We are going to navigate through the world of audits, equipping you with the knowledge and the tools to handle them with confidence and calmness. But before we get on into the topic, let me introduce myself. So, my name is Shane Harris, and around here on these social media streets, I'm also referred to as Shane the Negotiator, and I help coaches, consultants, and service providers who are overwhelmed and lack guidance to achieve true financial freedom. And I do that by providing expert tax and coaching services. That is what I do. That is who I help. So today we're going to be navigating the IRS audits, a calm approach to compliance. So let's get on in there and talk about these audits, right? An IRS audit is simply a review of your accounts and your financial information to ensure you're complying with the tax laws and reporting your income correctly. Audits can be random or it can be triggered by discrepancies in your tax returns. Understanding this process pretty much reduces and helps with the anxiety that you may have facing audits. So let's talk about some of the common triggers, which include large deductions compared to your income, mismatched information from third-party reportings, or repeated losses from businesses. And it's not always about something you did wrong. Sometimes you just fit the profile that the IRS wants to double check. So let's go back to some of those common triggers. Like I said, including large deductions is compared to your income. So oftentimes, as I see it often, when a good bit of you file your own taxes, or even if you go to some of these tax professionals, sometimes that is not really as detailed. You will be, let's say you made 100K, okay, in your business, but you have 500K in expenses. Now that's going to trigger some type of a red flag. Is the IRS is going to get all these flags that's going to say, warning. So when you do that yourself, sometimes you don't understand this, and then you will lump in all of these expenses in a group. So if you did not catch the previous recordings or videos that I did speaking about categorization and how to break down your expenses, go back and watch that so that this can make a little bit more sense to you as well. So if you have all these expenses, you have 500K in expenses and your income was 100K, that's going to likely trigger a warning. However, if you broke down the expenses on what you actually purchased, then that may actually reduce the chances of an audit. However, that's a high expense for only 100K in income. So those expenses would have to make sense for the IRS not to potentially see it as a red flag. The other thing that I mentioned is mismatched information from third-party reporting. So this is things like some of you don't like reporting all of your income. So if you are a 1099, meaning you may own your business, but you may also be working someplace else. Not talking about as an employee. I'm talking about if you may be working someplace else as an independent contractor, so they are paying you your wages and you receive that 1099 at the end of the year or the beginning of the following year. So they're going to report to the IRS on that 1099 the income that you receive. So I see this a lot with people who might have made, $1,500, $5,000, sometimes even $15,000. And then they may say, well, I didn't make that much money, so I didn't think that I need to report this and to file this. So you don't report that income to the IRS. But remember, if you were issued a 1099, that third-party agency that you were working with, they sent that 1099 to the IRS, and that's why you received that form. So the IRS already know you made that 1,500, that 5,000, that 15,000 and up. The IRS already know. They're just waiting for you to confirm it. So if you leave that out, then it's likely going to be like, warning, and it's going to trigger that's going to be a red flag and it's going to trigger a potential audit. Now, this can be a mistake because sometimes you may have multiple 1099s that you got throughout the year because you were working a little bit over there or working a little bit over here, and they all come in at random times. It's not in the perfect world. They will all come in between the 2nd of January, the 2nd week of January to the end of January. They will all come in that window. But that doesn't always happen. Sometimes they come in the middle of January. Sometimes you may get it in February. Now, your people who are issuing you your 1099, they have to process and send this out to you by January 31st. So if it's March and you still have not received your 1099, oh, they are about to get some penalties because they are late. So if you haven't gotten it by the end of February, you definitely want to reach out to whoever's supposed to send it to you so that they can send you that 1099. So again, as I said, they have reported it. That third party have already reported it. So now it's your turn to be honest and you report that also. So that's what I mean when I say it can get triggered based on a third party reporting. Or the next one, or repeated losses from your business. So those repeated losses in your business is not always something that you did wrong and always something that you did wrong. So those repeated losses is if you are in business and you have a loss this year, you have a loss next year, you had a loss the year before, and the year before that, that's 4 years of losses in your business. The IRS says that they will give you in a 5-year period, you have 3 out of those 5 years that you can potentially have a loss in your business. Once you go into that 4th year of a loss, the IRS can say, ooh, warning, warning, red flag. So then they're going to look at your documents. They're going to look into you as well. At this point in time, they can decide that your business is no longer a business and they can turn it into a hobby instead, which at this point, you still have to report the income, but you will not be able to take those expenses as a deduction. So that's another example when I said the repeated losses in your business, because the IRS want to know that you're profitable. So all of these losses that you continue to have, they're going to be like, well, you're not trying to make money in your business. So let's audit this and see what's really going on. And like I said, it's not always something that you did wrong. It can be they just randomly audit yours. It doesn't have to mean that you did something wrong. Your tax preparer did something wrong. There is nothing wrong with your return. Your name just came up and your business just came up and you just got flagged. You just fit the profile that the IRS wants to double check. Yeah, the IRS is profiling, but not that type of profiling. I'm just being silly, but the IRS may say, okay, we're just looking for particular types of business. So they may say we're looking to audit people who have Schedule C's with income between this range and that range, and they may audit that, and you fall within that guideline, so they may audit your return. So I'm letting you know this so that it can ease your mind, because as soon as people hear that they got audited or an examination, that's the new fancy word that they're using it, you're up for examination or you're up for review, that's the new fancy name. It's the same thing. It's an audit. As soon as you guys hear that, you're like, oh my gosh, Shane, what do I do? I'm audited. I'm like, calm down. Let's woosah. Breathe in, breathe out. Calm down. You might not have done anything wrong. They just want to double check some stuff. And as long as you're organized, and if you're working with me, it's definitely going to be organization going on over here. We just submit to them what they're asking for and keep it pushing. Then we're not going to have any problems. Okay? So let's go on into preparation is key. Ensuring that your tax returns, receipts, and relevant financial records are organized and accessible. This includes your bank statements, your payroll records, and other documents for deductions and credits that you're trying to claim. Being organized shows that you are thorough and that you're responsible. Now, oftentimes, I have some of my clients, they come, and you may be with me for more than 1 year. You're with me at least 2 tax seasons or more. And I get this common question. What do I need? What documents do you need from me? So if you've been with me the first year, you already know what documents you need. So when you come back the next year, bring those same documents with you. It's just going to be the newer version of those documents. For those of you who are not my clients, you have been preparing taxes someplace else for 5 years, 10 years, 15 years, 30 years, some of you 40 years or more. Bringing those same documents that you gave to the last people, bring it over here too. Bring it to your next person. You bring those same documents every single year. The only difference is it's going to be a year older. See, if you have 2022 W-2s, you're going to bring 2023's W-2s. If you have 1099s for 2022, 2023 is going to be that year's 1099. Whatever documents, you just bring the newest ones and bring it into your preparers. So that's a common thing that happens where you're not being responsible for what's going on. Look at your last tax returns and see what documents that you have to provide and bring those documents with you. It's time for you guys to start being a little bit more proactive and being responsible for your taxes and the documentation associated with it. And those bank statements is not the only thing that you're going to potentially need. You are a business owner, because I'm speaking to business owners, coaches, consultants, and service providers. All small business owners fall into this category, but I'm speaking to you guys in particularly. Your bank statement is not bookkeeping. We're going to need your profit and loss. We're going to need the balance sheet if possible. So it's not just your bank statements. You bring your bank statements, I'm going to send you away. I don't need just your bank statements. I need to see your bookkeeping. Bank statements is not bookkeeping, and that is not organization. That is just you being lazy. Yes, I'm calling you lazy. You're being lazy and cheap because you did not do proper bookkeeping, or you didn't want to pay someone to do the bookkeeping for you. Okay? So be organized. So those payroll records, if you are S corporation, or even if you're not an S corporation, that you're paying wages to employees, you need those payroll records so that you can bring them with you to file your taxes. That all goes a part of proper documentation. And the documentation for the deductions and the credits. So for instance, if you want to get some of the education credits, if you want to get child tax credit, if you fall within that income threshold that you can get child tax credit, a lot of you business owners that I work with, you are over the threshold, so you generally do not get the earned income credit or child tax credit. You're usually over the threshold. Okay? But it's other credits that you may need to claim and other deductions that you may want to take. We need the substantiation for that. We need the documentation. Being organized shows that you are thorough and that you are responsible. The more thorough that you are, the more responsible you are, the likelihood of triggering an audit. But it doesn't mean that you cannot. You can still dot all your I's and cross all your T's, and you can still get audited because you fit the profile that they're looking for. You didn't do anything wrong. Okay? So let's go on to the next one. Handling the audit process. So if you are selected for an audit from the IRS will notify you by mail. Oh, they will definitely send you something in the mail. So you want to never ignore those letters. Those letters are time sensitive. Timely response to them is critical, because they may say you have between this date and this date to respond to this letter, or they're going to take whatever other action. So you want to respond to it, because it can be something really small that you forgot something, or they just want a copy of something because they don't see it there. Simple. And they can go ahead and continue to process your return with no problems. However, if you miss that deadline because you ignored that letter that came because you got scared, because let's be honest, a lot of times if you're ignoring letters, it's because you got scared, you're just worried about what's going on in there. You just don't want to deal with it. And either one of those situations is not okay. You are a business owner and you have to take your business seriously. So we don't ignore letters that come in from that's legal. This is considered legal. So you want to respond to those letters. So in a timely manner. You can handle the audit yourself, or preferably, you can get somebody like a tax professional, an enrolled agent, or maybe, I don't know, maybe a CPA that's knowledgeable in the taxation part of things to handle it for you. I would say you never want to really do this yourself. Now, you can go ahead and take that chance and do it yourself, but you're likely going to get a lot of runaround and you're likely going to make mistakes. Now, if you think you are veteran at this and you can just go ahead and knock it out, forget everything I said and go do what you're going to do. But what it is that I'm telling you, go to somebody who can help you. It doesn't have to be me, but go to somebody else. If I have prepared your taxes for you and you got a nice little letter, you can just send it to me because you paid for audit protection, which means is that if you get a letter or something like that, I'll look at it and see what needs to happen, and then we go from there. But if you went to somebody else, you might not have had that audit protection, but it's okay. You can still come on over here and we can take a look at it. But do not ignore it and do not try to do this yourself, okay? They understand the ins and outs of the tax laws and provide representation and guidance. That is what happens when you go to someone who knows what they're doing, because they know all about it already. They don't have to go and research and look up this because they already know. We already know. You may have to go research and define this and define that and see what you can possibly do on Google and TikTok University and YouTube University to figure this out. But why go through all of that when you can just hire someone to look at it for you and bypass all of that and potentially making a mistake, okay? So let's get into some real life examples. You don't have to leave a little example. So let's take an example of a small business owner, and we'll just call her Emily, who faced an audit due to high travel expenses. And that's usually a big one. High travel expenses, because people just want to put everything on there. Whether they traveled or not, they're putting travel expenses from local, and if you actually went out on a business trip somewhere. Initially, she'll be panicked, and she worked with a tax advisor to represent her travel logs and receipts, to present her travel logs and receipts. The audit concluded smoothly with no penalties, thanks to her organized record and her professional help. Okay, so Emily, she got this nice little letter in the mail that says we're auditing your tax returns because of these travel expenses seemed unusual high. She reached out to the tax preparer, and the tax preparer was like, no worries, we got you. Let's submit the travel logs and let's submit the receipts. And there was no problems. There was no penalties. Everything worked out. Emily didn't have to pay back anything. They processed her return with no problems. Okay. Let's go into some post-audit action. What happens after? So once an audit is completed, you'll receive the results. So they'll send you another letter that say what the outcome was. If you owe additional taxes, you can agree and pay or disagree, and you have the option to appeal the decision that was made. If you disagree, consult with your tax advisor on the best course of action for you to take. So which may involve further negotiation or appeal in the tax court, of course. So a lot of the times where you might get these simple letters and you reach out to your tax professional or your tax advisor, a lot of times it's something quick that can be rectified and submitted. And other times you might just have to take it to court. That's just the way it is at times. So tips for future compliances. So to avoid future audits, ensure accuracy in your tax filing. Avoid guessing or estimating figures. You want to keep detailed records and receipts of all your transactions, and consider using accounting softwares for accuracy and consistency. Okay, so I'm going to say that again. To avoid those future audits, you want to make sure that your tax filing is accurate. So I'm not going to say no names, but I know there's a good bit of you that you go to get your taxes done. Your preparer sends you a video that they go over your return, or they may not send you a video, or you may not meet over Zoom. You may not meet in person. They may send it to you in an email and say, here's your tax returns. You just look to see how much you owe or how much you're getting back, and you don't read anything else that's going on those forms. it is your responsibility to read everything on your tax returns, even if you trust your professional. I don't care how much you trust me. I want you to read your tax returns. So that's why over here at Profit First Taxes, we always go over your tax returns with you. We're either going to do that over Zoom because we're only virtual. We don't come to you unless you want to pay for that extra service. But we will always go over your tax returns over Zoom, or if you're a recurring client and maybe you're out of town or something like that and you really can't make it, we will make a detailed video of us going through line by line of your return, send it to you, watch the video in its entirety, and if there's any discrepancies or anything, any confusions and things like that, you would get back to us and let us know, and then we'll make those corrections. The same thing, if we're over Zoom, we're going over it, that is your time to ask questions, make corrections, because we're going to verify everything. Because once you say, everything is good, let's submit it, you are agreeing that everything that is on that tax return is accurate and you're ready to submit that. So before you agree and sign your name, whether you're doing electronic signature, whether you're doing a hand signature, or whether you're using your PIN in the software, your tax preparer is putting in a PIN as your signature, any one of those three methods, you are still signing saying that, yep, everything in there is right. I'm good to go. What they put in there, he or she put in there, is accurate. It's right, and I'm attesting to that is all good. So if you get audited, you can't say, oh, I didn't know that was in there. Yes, you can, because you did know it was in there. Whether you legit knew that or not, you had the right to look at your return to see what was going on. So I hope that makes sense, because oftentimes many of you are making this mistake and it is costing you a lot more than just money. It's costing you peace of mind and it's giving you a whole lot of stress and anxiety. So some key takeaways: an IRS audit isn't a presumption of wrongdoing. So don't just assume that you did something wrong because you received an IRS letter for an audit. Within the right preparation and response, it can be a straightforward process. Stay organized, be honest, and don't hesitate to seek professional help, okay? So to wrap this all up, on navigating IRS audits, remember, knowledge and preparation are your best tools in handling them successfully. Stay informed, stay calm, and you'll navigate these waters, and it's going to be just fine. So teasers for next week. I like to give little teasers for the next, but not be for next week, because this on Monday we're doing this video, but on Friday, if you are on Facebook, you are getting this. Going to be live. Everybody else, you have to come on over to YouTube. I'm sorry, on Mondays, it's on Facebook, it's on YouTube, it's on multiple platforms. On Fridays, you do not get this content on Facebook. You have to come on over to YouTube to see this. So YouTubers, you guys are good. So this is your teaser for Friday. Everybody else, you have to come on over to YouTube to catch this on Friday, okay? So up next, we're going to explain retirement planning for entrepreneurs. So I like this topic right here. It's one of my favorite topics to talk about. And we'll look at how to set up retirement plans that offer tax benefits and secure your future. So join me for Tax Smart Retirement Planning, your future today, and don't miss out. So thank you for tuning in. I appreciate you all. For more tips and insights into mastering the business world, like, subscribe, and share if you are over here on YouTube. Everybody else, you come on over here on YouTube, like, share, subscribe, or you can just like, heart, and comment if you're anywhere else. Until next time, keep thriving and navigating your business journey with confidence, and I will see you